Gold has formed a new all-time high near the $2,740 per troy ounce figure, with the precious metal seemingly on track to break that all-time high this week. Fundamentals factors affecting gold's price include the relationship between dollar and gold's price, the Fed's intentions, the US presidential elections, and lastly the geopolitical tensions in the Middle East and Asia. We will be concluding this report with a technical analysis of gold's 4-hour chart. The negative correlation of the dollar with gold's price has been inactive over the past week. Over the past week, the dollar continued to strengthen against its counterparts, while the gold price moved higher, forming new all-time high along the way. Similarly to gold's price, US bonds yields moved higher since our last report, failing to negatively affect the precious metals price. Hence, for the time being, we ignore the dollar's recent movement in conjunction with gold's price, and instead we opt to focus on other factors. Yes, should the dollar continue to strengthen, or should US yields continue their upwards trajectory, we may see gold traders not being able to ignore the greenbacks rally, or even preferring US bonds which are interest-bearing instead of the precious metal. Yet for the time being, we highlight the disconnection of gold from dollar direction, as well as the direction of US bond yields. Since our last report, several Fed policymakers have spoken, with all appearing to be centering around one particular point, which is not if the Fed should cut rates, but by how much they should reduce interest rates. In particular, at the beginning of the week, Kansas Fed President Schmidt stated that he supports dialing back the restrictiveness of policy, followed by San Francisco Fed President Daly, who stated that she does not want to see the labor market slow further, which may have amplified the market's expectations of 2 rate cuts from the Fed by the end of the year. Yet despite the relatively dovish rhetoric, Minneapolis Fed President Kashkari implied that the dialing back of monetary policy restrictiveness may be in a manner that would avoid outsized moves. The comments made by Minneapolis Fed President Kashkari could contradict the market's current expectations of 2 rate cuts by the end of the year, which in theory may aid the dollar while weighing on the precious metals price given their inverse relationship with one another. However, gold traders may have glossed over the possibility of less than 2 rate cuts by the end of the year, and may have instead focused on the bigger picture, which is that the Fed may continue on its rate cutting cycle, which in turn may aid gold's price. As of today, we are 2 weeks away from the US presidential elections, which will see the incoming Vice President Harris take on former President Trump in a race that is too close to call. In particular, the lead that Vice President Harris appears to have had over the former president in the key swing states appears to have withered down to less than 1%, with some recent polls giving former President Trump a slight lead. Nonetheless, the market seems to be increasingly convinced that Trump may win the elections given the dollar strengthening over the past 2 weeks. Therefore, given the former US president's intentions for a more isolationist economic policy characterized by tariffs, such as an outcome could support the dollar, which could weigh on the precious metal. Yet with the race being this close, it appears to be a high level of uncertainty as to who will emerge as the victor and whether or not their respective political party will be able to win a majority in both the House and the Senate. Moreover, should the elections be decided by a narrow margin, we may see Trump or Harris contesting the results, which could prolong the entire process. In conclusion, as the election day nears and no clear victor emerging, we may see market jitters funnel safe haven inflows into the precious metal, which in turn may aid gold's price. The war in the Middle East is ongoing, with Israel assassinating Hamas leader Yahya Sinwar last Wednesday, and Hezbollah attempting to assassinate Israeli Prime Minister Netanyahu by striking his personal residence on Sunday in an attempt to retaliate on behalf of Hamas. The issue remains extremely volatile, with Israel expanding its military activities to southern Lebanon, which tends to enhance the possibilities of a regional war between Israel and Iran that could have dire consequences of the rest of the region. Moreover, On the other side of the planet, tensions between North and South Korea remains elevated, with South Korea claiming that North Korea has sent troops to Russia to help in the war effort against Ukraine. Overall, the geopolitical uncertainties on a global scale may aid gold's price given its status as a safe haven asset. On the flip side, should the aforementioned tensions begin to ease, it could instead weigh on gold's price. Gold's price appears to be moving in an upwards fashion after bouncing off our 2,720 support level and currently appears to be on track to form a new all-time high level. We opt for a bullish outlook for the precious metal, and supporting our case is the upwards moving trend line, which was incepted on the 10th of October, in addition to the RSI indicator below our chart, which currently registers a figure of 70, implying a strong bullish market sentiment. For our bullish outlook to continue, we would require a clear break above the potential 2,760 resistance level, with the next possible target for the bulls being the 2,795 resistance line. On the flip side, for a sideways bias, we would require the precious metal to remain confined between the 2,720 support level and the possible resistance level at 2,760. Lastly, for a bearish outlook, we would require a clear break below the 2,720 support level, with the next possible target for the bears being the 2,685 support line. Thank you for tuning in to our financial report today. We hope you found it useful. Until our next update from all of us here at IronFX, we wish you a solid trading.